So you want to know the difference between supply and demand and those imbalance zones. And you want to be able to effectively identify and trade those zones on a chart. So I will show you how to solve this problem with combining supply and demand with imbalances to give you that optimized entry. Now, before we get into how you can trade supply and demand with imbalances, let's first take a look at the differences between the two. Now, a supply or demand zone, they are formed of a swing in the market. You're going to see there's going to be an area in the market where you're going to have a swing high. You're going to see the market's going to drop to the downside. Now, that is where you're going to find your area of supply, and that is called the origin of the move. Now, for an area of demand, we're going to see the market coming from a swing low in the market, creating a move to the upside. That is going to create your area of demand. These are the zones of supply and demand that you need to pay more attention to. After we see the move created by the area of demand, you're going to find where we have areas on the chart where there's absolutely no selling coming into the market. And it's these momentum candles where you're going to find an area of imbalance has been left behind. Now, the opposite is true for an area of imbalance to the downside. We have absolutely no buying coming into that market. And that's where we're going to see an area of imbalance, a bearish imbalance is going to be left behind. Now, these areas of imbalances will and have to be filled at some point in the market. Now you understand and can see the difference between the two, let's now look at how you can combine them together. I'm going to go over to a price chart so I can actually demonstrate how you can use this to optimize your entry. So we're currently on the pound US dollar on a 4-hour time frame. I'm going to show you first how we actually look for those areas of demand and those areas of supply or those areas of imbalance and how we can actually identify, mark those out, and then I'll show you how you combine those two together to find the best area to take a trade from. So first, let's look at this big bullish candle head to the upside. We can identify here that the market had absolutely no selling in the market, and this has created an area of imbalance. So we could actually draw out this area of imbalance here from the high of this previous candle here. Just change this to an imbalance zone to the low wick of this next candle. So that is your area of imbalance. You can see the market is now pushing into this imbalance. We had a reaction of that 50%. Since then, we've closed back down with a manipulation to the upside of this previous area here. And we can see the markets continue to go down. That's how we identify an area of bullish imbalance. Now, the bearish imbalance, let's quickly remove this zone. We can identify here to the downside, we have some red candles. Those areas identify my area of bearish imbalance. We had an area here. We can see the market pull back into that imbalance. We filled that imbalance and then we continue to drop. And once again, we can draw another area of imbalance here, a small zone. We fill that imbalance. We have the manipulation back into the same imbalance zone and we can see that reversal. So that is how we can see those areas of imbalance and mark them out on the chart. Now let's have a look at how we actually look for areas of demand. But before you do that, a way of saying thank you for watching this video, I want to share with you a free gift with streaming my free strategy class, where you get one of my supply and demand strategies that I personally use. Now to get this free gift, just click the link above now, or there's a link below in the description of this video. Now looking for your area of demand, in this occasion we'll be looking for a swing low. So here we're going to identify swing low in the market, swing low, a swing low here in the market. These are the swing lows where we see the move to the upside. Now we do have a swing low here, but we would not look for an area of demand here because we don't see that follow through to the upside, breaking areas of structure. That is the key thing to take away here, that when we're looking for an area of demand, and the same will be for supply zone, we are looking for that continuation with that trend in the market. So again, on area of demand, how we draw our area of demand, let's go closer into this chart. So our area of demand here, we can look at these areas here quickly. We have a swing low here in the market, another swing low here. And when we draw our areas of demand, we're going to mark it from the low in the market, and we're going to mark it up here to the high of this candle. Now this will all make sense in a moment. We just mark this out as a demand zone. That is a demand zone I'm interested in seeing the market coming back to for a reaction to go long. Now again, if we look here, I have another demand zone I would draw here in the market, just like this. And I'd have another demand zone that I would draw out from this low to here. And that's my demand zones going to the upside. Now, if I move to the left here, I can't draw any more demand zones. They are the only zones from this low head to this high that I can actually draw on this chart. If we're looking at this area here in the market, we can see the market is making those lower highs. We have this lower high formed here that's manipulated by this point here in the market. We make another lower high. Now, it's a lower high in the market. Once we see it breaking this structure low here, we then create another lower high when we break this structure, another lower high. You can see the market continues to go to the downside. That is showing you that bearish market. Let's take those off quickly. Now, drawing out your area of supply, I'll be drawing out your area of supply here. We've got this high of this wick to the low of that wick and that candle. That is my supply zone I'm interested in drawing. We can see the market actually comes back into supply and drops away. That's not what we're looking at. We're just looking at drawing the zones. So again, here's a zone of supply I would draw. Might came back in again. Now, that's how we look at drawing the areas of supply and areas of demand. You've also seen how we can draw those areas of imbalance, and you've seen the differences between the two and how you actually draw them. Now, let me just quickly take these off the chart. We'll go back to current area we're looking at here in the demand zones. I'm going to demonstrate now how you combine these areas of imbalances and demand zones to give you a much more optimized entry area to take a trade from. So as the market goes up, we have this green candle, which is showing me an area of imbalance has been left over. So this is leaving an area of imbalance. So when I'm drawing my area of demand, which I know that this is an area of demand I want to be drawing. Why? One, we have this as our swing low. It's a higher swing low in the market. Two, we actually broke structure this high. So the market continued up and we broke structure. This shows me the market is in that bullish trend. Okay, now, as we have this as our area of demand, I'm drawing it up to where we have an area of imbalance. So you can see if I mark this out here to the wick of that candle, there's a very, very small area there of imbalance. And again, there's another area of imbalance above it. Now, what I'm using here is the combination of those imbalance zones and the area of demand to show me the optimized entry area I want to take a trade from. Why? I want to see these areas of imbalances get filled on the move down into the area of demand. Now, we're not always going to see a strong reaction back to the upside, but we can most definitely capture a lower time frame entry once you understand this concept. Again, we can see here we have an area of demand drawn, and we can draw an area here of imbalance. Now, the market head did come back into the area of imbalance, but we never came all the way into demand zone. So what that has now done here, we can actually mark out a new area of imbalance left over. This is an area of imbalance was left over. So we still need to see the market come back down into this imbalance, filling this imbalance before we get into that demand zone. But again, this is your optimized entry area to take a trade off this area of demand. Now we move higher. Let's just bring the chart a bit smaller. What do we have above here? We have an area of imbalance again, left over imbalance, leaving that as an optimized area of demand. I will show you examples of demand zones and supply zones in a moment as well, that I would not be looking to take a trade from. So we can see that market is now pulling back to where? To our optimized area of demand. So what does that mean? That means we're looking for any trades once we get into this area of demand back to the upside. And that's how you can combine your areas of demand with imbalances for that optimized entry. So let's now just take everything here off the chart and we'll go back and we'll have a look at an area for supply. So you can see example in both ways. So we can see how the market was in a downtrend. And I know this is in hindsight, but if you go away and practice what I'm sharing in this video, you'll see how it works for you. So again, we can identify here that we have a swing high. Okay, we break this structure to downside. Now to start with, I want to share here, there's no area here of supply that I'm interested in trading. Why? Because I don't have that area of what? Imbalance. That's right. I don't have an area of imbalance with that supply. So what I'm actually looking for is that imbalance. Where do we have that imbalance? Well, we break this structure low here. That is my area of imbalance. Remember, the imbalance zone here on this chart is that red candle. So I'll be drawing out my area of supply from this swing high to the low of this bullish candle as my area of supply. That's my optimized zone to look for a trade. So we're looking for the market here to pull back up into this area of supply for a trade. And I didn't get this. What actually happened here, we just pulled back into the area of imbalance. And you can see this. You can look for those trades out of those imbalances. But if you want that optimized best entry, this is how you're going to achieve it. So again, let's look at how price moves. We drop down again. We make a swing high. Okay, lower high in the market. Why? Because this was our high. We make a lower high. We break this structure. We have an area of imbalance. It's a great example here now to show you that not every zone will work. There's no strategy out there that's going to give you no drawdown, no losses in the market. Once you understand this, then you're going to become a much better trader. So this is our area here, okay, of supply. Now it did pull back into that supply zone. But here you can see we had a manipulation through this high to fill more of this previous imbalance. Okay, that's where you need to understand what's happening on the chart, where you need to place that stop. Now, it was probably here. I personally would have been stopped out looking at a trade off this area of supply. But what we had here first is this push down on this candlestick to show me all this momentum to the upside where we had this area here of imbalance. Remember, that's our imbalances. It was fully filled. And then we see continuation down. So this area of supply did not work. Again, what do we have here? We have another break to downside, leaving me from this swing high to here another area of supply. Okay, we just failed to test that area of supply. We drop, we break structure, what we need to see, and the market pulls back into our supply zone. That was your optimized entry to take a sell. You can see the market continue to go down. Where would you take profits? Swing lows. Look for areas to the left back on the chart. Again, what do we then see here? We have another break of structure, a lower high is formed, and then we have an area of supply. And once again, it's an optimized zone. Why? Because we have that area of imbalance. So from this swing high to this area here on the chart, we can mark out a new area of supply. We can see the market comes back in once again. Okay, that's how you can look for those optimized entries for a trade. And the market continues to go down. Now looking at this area of the chart, this is the areas where I would not look to draw my zones. Okay, so we have this area here. We don't have that optimized area. What you've been learning through this section of the video, we don't have this area of imbalance. We don't have a nice momentum drop to downside showing you these areas of imbalance. That's key to understanding how to use these optimized areas. So that is the difference between the two, the areas of supply and demand and imbalances. But I've also shown you how you can combine these two together to give you that optimized entry. And remember, for watching this video today, I'm sharing with you my free gift with the free strategy class. Now to grab that gift, click the link above now, or there's a link below in the description of this video.